So the tech sector just hit a speed bump. We've seen a significant sell-off in tech stocks recently, and it's got everyone talking. Apple, among many others, took a dip, and Nvidia, the darling of the chip world, followed suit. This isn't just a blip on the radar, it's a larger sign that investors are getting nervous about the tech industry's future. But before you hit the panic button, let's dig a little deeper and see what's really going on. Remember, every cloud has a silver lining, and this market dip might just be the buying opportunity you've been waiting for. This sell-off is a wake-up call, reminding us that even the mightiest companies can stumble. But it's important to remember that the market moves in cycles. What goes down often comes back up, and many times it comes back even stronger than before. So before you jump ship, take a deep breath and remember that this too shall pass. The key is to stay informed, keep a cool head, and be ready to deploy strategic capital when the opportunity knocks. Now let's talk about the Mag 7. These tech titans, Alphabet, Amazon, Meta Platforms, Microsoft, Tesla, Apple, and Nvidia have been on a tear for years. But even these heavyweights aren't immune to market forces. The recent sell-off has shaved off a significant chunk of their combined market cap, $900 billion to be exact. But let's put it in perspective. These companies are still powerhouses, sitting on mountains of reserve cash and boasting some of the most innovative minds on the planet. A temporary dip doesn't erase their long-term potential. In fact, I believe it makes them more attractive to savvy long-term investors looking for a bargain. Remember guys, investing is a long-term game. These asset classes don't often pop up on sale, so if you're looking to take advantage of the price discounts like I am, then now might be a good time. The tech sell-off has sent ripples throughout the entire market. The Nasdaq 100 index, which is heavily weighted towards tech companies, took a nosedive, experiencing its biggest intraday drop in almost 2 years. The Dow Jones Industrial Average and the S&P 500 also felt the heat, reflecting the interconnectedness of the global economy. So, what's causing all this anxiety? Well, there are a few factors at play. Inflation is still a concern. Interest rates are not dropping as fast as expected, and there are whispers of a potential recession on the horizon. These economic uncertainties have investors feeling jittery, and when uncertainty reigns, they tend to pull back from more volatile asset classes. But remember, fear is a powerful motivator, and sometimes it can create opportunities that wouldn't exist otherwise. Now, if this is your first rodeo, then this all sounds pretty scary. But if you're a seasoned investor who has been around for a few downturns, then you probably see the opportunities popping up already. So before you sell everything and hide your money under the mattress, let's talk about the potential silver lining in all of this. Market downturns, while unsettling, can be a fantastic opportunity for investors to buy high-quality stocks at discounted prices. Think of it like a Black Friday sale for the stock market. Everything is marked down, and you have a chance to snag some great deals. The key is to be prepared, do your research, and focus on companies with strong fundamentals and a solid track record of growth. I am looking for some bargains on tech ETFs, and the downward price has pushed yields even higher. ETFs like Harvest Tech Achievers is currently sitting a 9% yield, which is pretty amazing for this fund. The leveraged version is over 11% yield currently, and is the highest I have seen this yield at. It's the time to be strategic and capitalize on the market's temporary bout of pessimism. Let's take a closer look at Apple and Nvidia, two companies that have been caught in the crosshairs of this tech sell-off. Apple, despite the recent dip, remains a cash-generating machine with a loyal customer base and a pipeline of innovative products. Nvidia, the leader in graphics processing units, or GPUs, is riding the wave of the artificial intelligence boom, a trend that's only going to accelerate in the coming years. Yes, their stock prices have taken a hit, but that doesn't change their long-term growth prospects. In fact, it might even make them more attractive to value-conscious investors. Remember, the market often overreacts, both to the upside and the downside. YieldMax funds, NVDY, and Apple Option Income are two high-yielding ETFs I have been considering adding to my portfolio. I have been holding off on picking up any YieldMax, but I think with the current yields and prices, I'm going to dip into one of their funds and will let you know in the next portfolio reveal. The tech sector, like the stock market as a whole, has its down months and its up months. The key is to stay buckled in, keep your eyes on the horizon, and remember that the long-term trend is your friend. As they say, when in doubt zoom out, The 5 to 10-year chart history typically paints a much better picture. Don't let short-term fluctuations shake you out of quality investments. This recent tech sell-off, while unsettling, is not a reason to panic. It's a reminder that markets are cyclical, and downturns are a natural part of the investment cycle. Use this opportunity to reassess your portfolio, do your research, and look for buying opportunities in companies you believe in. Remember, fortune favors the bold, but it also rewards those who stay calm, stay informed, and stay invested.